Market to Market is everywhere you are. Subscribe to Market on YouTube, find us on the PBS video app to stream on demand, and add our 3 podcasts on your favorite podcasting app.
Welcome in. This is the Friday, August 13, 2021 version of the Market Plus segment. Joining us now is Arlan Suderman. And Arlan, we were talking sports between the breaks, and I just as soon do that, but I know we've got more things to accomplish. Like, I cut you off talking about the hog market. We were talking about the demand if 2 months in a row go, let's see if I get this right. If we don't buy as much meat for 2 months in a row, we've got a trend. So the trend in pork is going to get caught up in what's going on in beef. What's the export story like in pork right now?
Well, the export story is a little bit worrisome with China right now facing COVID and people staying at home, and they tend to eat less meat when they're at home. So that's a concern to the market. But what's really keeping producers awake at night worrying about is African swine fever on Dominican Republic. That's very close to Puerto Rico, and Puerto Rico is considered part of the United States. And so it would be an increased battle trying to regionalize our production so that we can continue to keep export markets open. And would China do that? China initially probably would not. So that's a real concern on the export front. That's good for beef. It's good for the other meats, but that's a real risk factor for pork going forward. And hopefully we'll be able to eradicate African swine fever off Dominican Republic and keep it off of U.S. borders. That's
close, though. I know that's been talked about for a while. All right, Arlan, we have some questions that came in via Twitter and Facebook, and I'll get your thoughts on what you're thinking here on another issue in a moment. But let's start with Bradley in Upland, Nebraska. He's asking about how are international interest rates going to affect the price of the U.S. dollar long term, and could its appreciation in value eventually hurt export sales of American commodities?
Yeah, it really comes down to the dollar. And when U.S. interest rates are higher than other countries overseas, then foreign money wants to come to the United States to participate in those securities markets. They need dollars to do so, so they bid up the dollar so they can participate, and makes it tougher for our commodities to compete with a strong dollar, and vice versa. If you look at the top 10 or so markets out there where someone could invest their money in securities, the U.S., as low as our rates are top that list. We're the highest of those most attractive markets. You still have Japan and Europe with negative rates. And so that's currently what's been holding the dollar up. If we start to see some of those countries start to raise their rates, and we are starting to see Canada and some other countries now starting to say maybe it's time to taper and raise rates, then that can actually help allow the dollar to weaken, and that's seen as inflationary, but also helps us compete on the world market better. And so that's what we're seeing. We saw the sharp break in the dollar to end the week. Is that the sign of things to come? We'll see.
It's always a we'll see attitude. That's always one to find out where those trends are going, and then we go look in the rearview mirror and say, oh yeah, that was the sign. Shane in Bloomfield, Nebraska has our next question, Arlan. If the corn market would happen to break out of a sideways trade, how far up or down would it likely trend near term?
Well, the last leg of a bull market is usually where the funds have given up on the market and the commercials are trying to get their coverage that they need. How high will that go? And I've been saying since the start of this whole back in February, when we saw expanded position limits and all the money that's in the market, expect bigger than in the past and expect swings in both directions. That's exactly what we've had. I'm dodging the question a little bit about how high, because regulators won't allow me to answer that question. But suffice it to say, we are in an environment where if USDA would drop the yield some more below that 174 level that I talked about in the first segment, I could easily see new highs in this market. And once that momentum goes higher, it could take us significantly higher. Those are big ifs, but that's something you need to be aware of. But watch for when the funds quit the buying. They've got a lot of buying power now, but when they quit buying and it's just primarily the commercials buying, that's when I want to be getting out.
Thank you, Arlan, for that disclaimer. And that is something that maybe we just haven't explained enough. There are certain limitations to what some of our analysts can say, and Arlan just articulated that, so thank you for that. But this one is another grain question that maybe doesn't put you in such a tight corner. But Phil in Dresden, Ontario, asked us via Twitter here, the Eastern Corn Belt have Illinois, Indiana, and Ohio pushing potentially record yields. He says Ontario and Quebec likely as well. It's a contrast to the Western Corn Belt, with December corn at approximately $5.79 in the $5.79 area now. How dynamic will future corn demand be? This is an East versus West question in a classic current form. What do you see, Arlan?
Yeah, we will see more corn moving in west. I mean, that's what the market's going to be trying to do. We've seen years when more corn moving east. We anticipate that the export market's going to be drawing corn. The corn really looks good in the eastern Midwest, and as you says, you get up into Ontario as well. One of the things we're going to be watching for this next week in the crop tour, the Midwest crop tour, as people walk in the fields, is are those ears as big as what the condition ratings would suggest? How are they filling? And if in fact those ears are big, have the size, and are filling well, then we're probably going to have some high yields and record yields, as Phil said, in the eastern Midwest. That's not going to be the case in the West. We're going to be supply deficits there. China likes to pull from the Pacific Northwest. That's going to be difficult to do with smaller crops in that region. So the net effect is going to be stronger basis in the West, weaker in the East. So as you're a producer, make your marketing decisions accordingly. And what the market's trying to do is pull that grain supply to the West.
All right, let's stick in the West, but let's talk about the wheat market. Stephen in Virginia asked us via Twitter a question about wheat. And this one applies to many of the crops. So you can exchange if you want here with Stephen's question. With winter wheat being needed, will acres have to get bought by September? And will that be the market train conductor?
Yeah, that's currently with the rally that we're seeing here now. The market realizes with a small Russian crop, a much smaller Canadian crop, we need to buy more winter wheat acres. We've been in decline. We're near 100-year lows. It's time to buy those acres. September is really kind of the last window of opportunity. But when you get in the high plains, if you have moisture, you plant a crop. And if it's the fall of the year, that crop is going to be winter wheat. So the other piece of the equation is what's the moisture situation? La Nina is expected to get started again over the next 30 days. So we're going to be watching whether that shuts off the rain in the central and southern plains. That'll have an impact as well.
That was part of our discussion on the MTOM podcast this week up South Dakota. We talked there about the conditions. But let's talk about buying acres when it comes to cotton, Arlan, because that was a big battle that we had for most of 2021 as you were making those decisions. What's happening in the cotton market, and how are they going to stay competitive against wheat in some of those same areas?
Well, right now, what the cotton market's watching is Tropical Storm Fred targeting the southeast. And because that crop was planted a little bit later, the cotton's going to be a little bit more vulnerable than normally what we'd expect to see during hurricane season. So that's what the market's watching now. But as we get into this next year, you're right, we're continuing this battle for acres between cotton, soybeans, and wheat, primarily depending on which part of the belt you're in. And that battle is going to continue right on into the spring once again and helping elevate all the prices. Inflation has many different looks, and this is what it looks like in the commodity sector.
Well, and frankly, the producers in your state of Kansas, I mean, they are in a new triangle of those three crops that you're talking that I don't know if many people realize has really happened. Or am I misreading what's going on in Kansas?
No, absolutely. There's been a lot more cotton planted in southern Kansas here and over the last 10 years. I helped some producers get started with that during my extension days back when I was working with Extension. And it's been expanding as an opportunity crop in southern Kansas with some of the mills that we have there. Soybeans, planting behind wheat especially, but even full season soybeans, another favorite crop. So we're really a mixing bowl in Kansas, and corn has become a major. We've planted more corn in some years than Ohio. So it's really a battleground state.
It's kind of, we talked about it in the broadcast about the census and the way things are changing. It's the census of agriculture, same way. Arlan, I want to leave with this. I like to ask the analysts, what's on your mind? What's the biggest thing you're watching right now that a producer should be watching at home?
I'm watching inflation. I'm watching monetary policy, and right now Washington is moving down the road to modern monetary policy, modern monetary theory of policy from the Fed and from Congress, and that can have a big impact on the prices we receive at the farm gate. And it doesn't mean that prices go straight up, commodity prices, but it does mean that they tend to trade at an elevated level as they go up and down. If that changes, then that impacts the dollar and that impacts commodities. But right now, I think we stay elevated. But that also means input costs are going up too. So watch that end of it.
That's always the second half of that 1-2 punch is always the hard one. All right, Arlan, good to see you. Thank you so much. And I heard you got to go mow the lawn now with all that rain.
Yeah, the dry season ended with 5 inches overnight.
Oh, well, keep the basement dry. All right, Arlan Suderman, thank you much. Next week, we will look at the renewed concerns over an old livestock disease, and Mark Gold will join us to analyze the commodity markets. Thank you so very much for watching on this Market Plus. Have a great week.